This is a demonstration of exercise S412 posting closing entries directly to T accounts, and the following balances appear on the books of Sarah Simmons Enterprises, and the problem gives us several accounts, and these are the adjusted balances. So the problem asks us in the first requirement to open a T account for each account and insert its adjusted balance as given at December 31st. So I have opened each one of the T accounts, and I have also included the adjusted balances that we were provided in the problem. The second part states to post the closing entries to the accounts, denoting posted amounts as CLOS, or that's short for closing, and the third part is to compute the ending balance of retained earnings. So we know that when we get to the end of the accounting period, we close our temporary accounts, which are our revenue and expense accounts, to income summary. Then we transfer the balance from income summary to retained earnings, and we also close our dividends to retained earnings. So our first account we are going to close is service revenue. Service revenue has a $24,500 adjusted balance, so that is a credit balance. So to close service revenue, we are going to debit it for $24,500, and we are going to credit income summary for that amount. Next, we have our expense accounts. All of our expense accounts have normal debit balances. So to close the expense accounts, we are going to credit each one of these. So salaries expense $6,200, rent expense $3,500, and advertising expense $2,000. And as you notice, all of our accounts, our expenses and revenue, all have zero balances. So now they will be ready to begin to accumulate information for the next accounting period. Also, as I was crediting each one of the expense accounts, I had Excel adding those amounts together, and then income summary is debited for the total. So where did this $11,700 come from? It's the sum of $6,200, $3,500, and $2,000. So those are credit entries. So we would debit income summary for the total $11,700, and then we get a new balance in income summary. Since our revenues were greater than our expenses, income summary now has a credit balance of $12,800, which is actually the amount of net income. So now we need to close income summary. So to close income summary, we debit it for $12,800, and we credit retained earnings for $12,800. But we also need to close our dividends. Dividends had a $10,500 debit balance. So to close dividends, we credit dividends for $10,500, and we would debit retained earnings for the same amount. And we see that our ending balance in retained earnings is $31,900, which is the answer to number 3. And that is the conclusion of the demonstration for exercise 412.